Hi, my name is Isabella Pratt, and I apologize in advance if you hear lightning or thunder because there's a hurricane currently outside. But here is my lovely audience with our dog Paisley. And so, did y'all know that bookkeeping is the only word within the English language, thank you, that has double letters back to back to back? I didn't know that either until someone pointed that out to me. But I'm not here to tell y'all funny jokes, but I'm actually here to explain to y'all what accounting is, what a journal entry is, and how to do a journal entry. So, according to theaccountingcoach.com, the accounting profession involves doing financial transactions as well as producing income statements, financial statements of any sort. And so that is not the only thing that accountants do, but it is part of the foundation of becoming an accountant or doing business in general. So the financial corporate institution states that a journal entry, as I said before, is essentially the way in which you record all transactions within a business. And if you don't know how to do that correctly or things are incorrect, then your financial statements could be completely ruined or completely inaccurate, which none of us want to happen. So a journal entry is how you specifically do a financial transaction. So whenever you do a journal entry, essentially you are recording what happens within that transaction, where accounts decrease and where they increase. So a really standard journal entry to perform is a single entry method of bookkeeping. So essentially what that means, you will only have one account that is debited and one that is credited. So debiting and crediting, as said before, indicates where accounts increase and where they decrease, but that also depends on the type of account that they are. So there's three different categories of accounts. We have assets, we have liabilities, and we have stockholders' equity. So assets increase whenever you debit to the account, and it decreases when you credit. Liabilities increase when you credit the account and decrease when you debit it. And the stockholders' equity are the same, where they increase with credit and decrease with the debit. So whenever you're doing these transactions, again, you have to know what kind of account is being handled with, and you have to know which one is correctly debited and credited. But above all, the most important thing to know is that your debits and your credits have to equal one another within a transaction. And if they don't, a discrepancy has occurred and the error has to be corrected as soon as possible. So we're actually going to dive into an actual example of doing one, just so you understand how to do it, and once you do, it's honestly just like riding a bike, and it's super simple. So we're going to be doing an example of buying furniture with cash. And for simplicity reasons of this example, we are just strictly buying the furniture with cash, no credit, no nothing like that. So whenever you are at the store and you buy your piece of furniture and you come back, you have to record your transaction, no matter how big or small it is. So whenever we're recording this transaction, we only have two accounts involved. We have cash and we have furniture. So as I said before, your accounts have to be either debited or credited, but they have to be equal no matter what. So I actually have a little drawing for you to just kind of give a visual of it. So when we're performing the transaction, we actually have to write it out a specific way. So here we have an example of it. So here we have our furniture account, like I said before, and we have our cash. So here, because it's on top, it indicates that it's a debit. So we debit furniture for $200. We're just saying that's how much the furniture cost. And we have credit to cash for $200. So the reason why these two are the same is we're showing that there was a decrease in cash. So we have less cash in our pocket, like physically we have less cash in our pocket, and that cash is being used to buy this piece of furniture. And the reason we're putting it at the sale price is because we're saying how much of the asset was increased, how much the asset account increased, and therefore we're also showing where this account decreased, because it decreased because we were buying this specific asset. Simple? Exactly, you got it. So whenever you're doing any kind of transaction, such as buying any kind of piece of equipment, supplies, anything like that, you can do a simple transaction such as that. And again, as shown on this board, and as I said before multiple times, your debits and your credits have to equal, because if they don't, that means money has been lost or allocated incorrectly, and we have to make sure that it is put it within the correct place. Now, according to thebalancecareers.com, whenever you're done with doing your transactions for the whole year, your total debits and your total credits have to equal, as said before. It's not just transaction by transaction. All of your accounts have to equal one another. And if not, you have to go back to each transaction and you have to see where the discrepancy occurred, which it's just best to do it as you're going to make sure everything is in place and as it should be. Again, sorry for the thunder if you can hear it. So just to wrap things up, we covered what accounting is, what a journal entry is, and how to do one. And I hope this will help you in your future business, careers, or just in your personal finances as well. Thank you. And then here's my lovely audience again. Thank you.